Okay, hopefully you can hear me now. Okay. We are going to go ahead in here and start over. Thank you for your patience. We were having some volume technical issues here. I'm going to share my screen here and we'll get started. Thank you again for your patience. Okay, today we're going to talk about how to maximize solo 401k tax savings by making pre-tax employee contributions as well as pre-tax employer profit sharing contributions to a solo 401k plan. We're going to concentrate on an S corporation or an LLC tax as an S corporation, so effectively W-2 gross wages. So here's our calculator. Let me increase the size of the screen here. And let's plug in all the numbers here. So we're going to concentrate on tax year 2025 for now. Let's say the individual is under age 50, so we'll put age 45. Let's say their W-2 wages, box 1 of their W-2 wages is $100,000. We're going to click on calculate. So here, someone who is age 45 with W-2 wages of $100,000 from their self-employed S corporation or LLC tax as an S corporation, they're going to be able to make a $25,000 employer profit sharing contribution, and that can be done on a pre-tax basis. That calculation is derived by multiplying 100,000 by 25%, because it's the employer contribution is always a percentage base. So that's how we get 25,000 by multiplying 100,000 times 25%. And then you can also make an employee pre-tax contribution of $23,500. So when you add these two amounts together, that's how you get to $48,000. $48,500, I should say. So 25,000 plus that 23,500, the maximum contribution for this individual is $48,500 of pre-tax employee and pre-tax employer profit sharing contributions. That would all be tax deductible, reducing your taxes on the corporate side by $25,000 and on the personal side by $23,500. Okay. Let's do another calculation here. This time, let's increase it to, let's say $200,000, and you're going to see how it's a little bit different. The numbers will be a little different. So, and we'll keep it at under age 50 as well. We'll do an age 50 or older in a little bit, because that's going to show how you can do a catch-up contribution amount. Therefore, you're going to be able to contribute more than the overall limit, which is $70,000 for tax year 2025. So this person's age 45. Their W-2 wages from their self-employed business for tax year 2025 is $200,000. Click on calculate. So again, the calculation for the employer profit sharing amount, the pre-tax employer profit sharing is going to be 25% of $200,000, which is $50,000. You're going to see here that it also gives you, the calculator also breaks down the employee contribution of $23,500. So when you add those two amounts together, obviously that's going to be $73,500. Well, you can't contribute more than the overall limit, which is $70,000 for tax year 2025. So here it says total contribution is $70,000. So even though the calculator breaks down each contribution type maximum, you still have to understand that you can't contribute more than the overall limit for the year, which is $70,000 for tax year 2025 under the total contribution column here, and it's also broken down here at the graph. So what you could do instead of making an employer profit sharing contribution of $50,000, you could say, well, I'm going to do an employee pre-tax contribution of $23,500, and then I'll do the difference up to $70,000 as an employer profit sharing pre-tax contribution. So you still get to the same numbers because you can't go over $70,000 between both sources. But now you could deduct more on the personal side, the Form 1040 tax return on Schedule 1, and then you would deduct less on the 1120S employer side as far as the contribution amount. But bottom line is that you can't go over that overall limit of $70,000 between employee and employer contributions. Let's do a calculation of someone who's age 50 or older, to give you an example of the catch-up. So let me make this screen a little bigger here. Let's say the individual is age 52. Let's further assume that their self-employment income from their S-corp to their W-2 wages is just like before, $100,000 for tax year 2025. I'm going to click on calculate. Okay. Here, the employer profit sharing contribution stays the same, which is 25% of $100,000, so $25,000. The maximum employee pre-tax contribution is $23,500. This person also qualifies for the $7,500 catch-up amount because they're age 50 or older. So the calculator gives you the total contribution amount for this individual, so it would be $56,000. And that takes into account the $25,000 employer profit sharing contribution, which is pre-tax, the $23,500 employee pre-tax contribution, and the catch-up contribution of $7,500. That's how you get to that total contribution limit of $56,000. Now let's do a calculation for someone who is age 60, 61, 62, or 63. That's going to give you an example of how they can do a super catch-up contribution. For tax year 2025, resulting from Secure Act 2.0, now you can also do a super catch-up contribution amount of $11,250, but it's only available for those who are age 60, 61, 62, or 63 in 2025. So it's not available for 2024. It's available for tax year 2025 and presumably going forward. So let's do a calculation here of someone whose age, let's say they're 61. We'll use that $100,000 example again of W-2 wages from their self-employed S corporation. Click on calculate. Here we go. The calculator is actually going to give us the breakdown here. So you're going to be able to do 25% employer contribution. So 25% of $100,000 is $25,000. You can do a $23,500 employee contribution as well. You see the catch-up figure here, the 401k catch-up, the $11,250. You add those amounts together, so $25,000 plus $23,500 plus $11,250. That's how you get to a total contribution amount of $59,750. So that includes that super catch-up amount. You're going to see it doesn't list $7,500 because you can't also do $7,500. So instead of doing $7,500 catch-up contribution, you would do an $11,250 catch-up contribution. So you can't also do $7,500. Okay, let's do a calculation of, let's see here, let's do another example here. Let me know if you have any suggestions of an amount you want to do, but again, we've been doing calculations here on how to maximize your tax savings by using a solo 401k, by making employee pre-tax solo 401k contributions, as well as employer profit sharing pre-tax contributions when your business is taxed as an S-corporation, where you report your self-employment wages on a W-2. Okay, let's do one more calculation and then we'll take a look at some questions here. Let's do a calculation for, let's do it for tax year 2024. Let's just do one, since you still have time to make contributions for tax year 2024 here in 2025 by your business tax return due date, plus timely filed extension. So 2024, we're going to say this person is under age, let's say they're age 50 or older. So we'll put age 55. Income, let's use $100,000 again. Let's click on calculate. Okay. And again, for tax year 2024, I think I put 10,000 instead of 100,000. Let me redo this. So 100, so age 55. 100,000 for tax year 2024 calculation for W-2 from your self-employed business. Okay, for tax year 2024, the overall contribution limit is $69,000. So this individual is going to be able to do a 25% employer profit sharing contribution of $25,000. 25 times 100,000 is $25,000. Then you can do a pre-tax employee solo 401k contribution of $23,000. And then this person is over age 50, so they can also do a catch-up contribution amount of $7,500. You add those three amounts together, that's how you get to $55,500, which is well below the overall limit. So this individual is going to be able to make a contribution of $55,500 to the solo 401k, all as pre-tax contributions, and therefore reduce their taxable income by $55,500. All right. Let's look at a couple of other items here, and then we'll look at some of your questions here. So let's talk about how to report these contributions on your tax return. And we're going to hone in on an S corporation or an LLC tax as an S corporation, since today's presentation is surrounding how to maximize your solo 401k tax savings by making both pre-tax employee self-directed 401k contributions as well as employer profit sharing pre-tax self-directed 401k contributions. So let's look at our reporting contributions page on our website. We're going to scroll down till we get to the S corporation section. So here, let me see if I can blow this up a little bit here. So again, we're talking here about employer and employee pre-tax contribution for an S corporation or an LLC taxed as an S corporation. So reporting contributions on your tax return depends on multiple factors, including the corporation type, whether it's a C-corp versus an S-corp, and the contribution type, pre-tax employer versus pre-tax employee contributions, for instance. So for both an S corporation and a C corporation, employee pre-tax contributions are going to be reported on Schedule 1, line 16. So let's say we're talking about tax year 2024. You would report that $23,000 pre-tax employee contribution for an S corporation on line 16 of your Schedule 1. So employee pre-tax contributions are reported on your Schedule 1, line 16, which is an attachment to your personal tax return Form 1040. Now, alternatively, you can report those employee pre-tax contributions in box 12 of the Form W-2. Just don't report it in both 1120 line, don't report it both on the 1120S, line 17, as well as box 12, because you'll be double dipping. Okay, let's take a look at the employer pre-tax contributions. Let's see here. Okay, there's that box there. So for employer pre-tax contributions for an S-corp, you're going to report those on the Form 1120S, line 17. So that 25% of 100,000, which would be 25,000 per our example on our calculator. So if you make a profit sharing contribution of $25,000, that gets reported on the business side. So if it's an S corporation, it would be Form 1120S, line 17, and that will reduce the taxable business income for the year. So in review, employer pre-tax solo 401k contributions are reported on the 1120S, whereas employee pre-tax contributions for a solo 401k are reported on the Schedule 1, line 16. Okay, here's a good, I'll shoot over this page from our website as well. This here is a good page that goes over how to report contributions on your tax returns. So we did a presentation a few days ago on it. It's got great information on there, charts and everything. Even has some Q&As. So I'm going to go ahead and shoot this over here on the live chat so you have it at your fingertips. As a matter of fact, I'll share both pages with you. Okay, here's our first link here. And let me share the second page with you. All right, keep in mind that you also still have time to open a solo 401k plan for tax year 2024 here in 2025. Especially since we're talking here about an S corporation or an LLC tax as an S corporation. You're going to be able to open a solo 401k plan here in 2025 by March 15 so that you can make employer profit sharing contributions for tax year 2024. You wouldn't be able to make contributions you wouldn't be able to make employee contributions. That's employee pre-tax contributions, unfortunately, for 2024 here in 2025 if you just open the solo 401k here in 2025 for your self-employed S corporation or LLC taxes an S corporation, because the plan had to be opened by December 31st of 2024, but you are going to be able to make employer profit sharing contributions for tax year 2024 here in 2025 if you open the solo 401k plan now by March 15, or even if you waited till September 15, if you filed for an extension for your business tax return, your S corporation or an LLC taxes an S corporation, you'll still be able to make pre-tax employer profit sharing contributions for tax year 2024. On a separate note, you'll be able to make voluntary after-tax solo 401k contributions as well as part of the mega backdoor if you open a solo 401k plan here in 2025 to 2024, as long as you open it by September 15 of 2025, provided you file for an 1120S business tax return extension. So it's the employee pre-tax contributions and the employee Roth solo 401k contributions that you can now make here in 2025 if you did not already have a solo 401k in 2024, or if you did not open it by December 31st, 2024. So it's a little quirky, I know. Okay, let's take a look at some live questions here, and we'll be done for today. We'll be back again here at 1 p.m. Pacific time. So we got a question here from Gavin, excuse me. I have a general question on solo 401ks. A couple is married, filing jointly, and the husband has W-2 income, and the wife has a sole proprietorship business. Okay, so it sounds like two separate businesses. The husband has his own, let's say, S corporation, so he has a solo 401k for his business. The spouse, so the wife, she's a sole proprietor, so she has her own separate solo 401k. All right, neither is involved in the other's business. When calculating contribution limits to the wife's solo 401k, does the wife need to include the husband's day job W-2 income on Schedule SC Form 1040 to figure her self-employment tax? Or is that totally separate and the wife should only show her W-2 income on Schedule E calculation? So again, it's two separate solo 401k plans here because they're self-employed in separate businesses. That's one. Second, the husband has his own, let's say, S corporation. If he's getting a W-2, it must be an S corporation or an LLC taxes an S corporation, for example. So his contributions to the plan will be based on his own W-2 wages. So his gross wages. Now, box one. So that would be true for both employer profit sharing contributions and employee contributions. So his wife's sole proprietorship income, so line 31 Schedule C, is not going to impact her husband's calculation at all. So hopefully that answers that question. And then her calculations are going to be based on her line 31 Schedule C wages, which is the net profit. But they're calculated separately because they're separate businesses and they're also separate plans. So the wife's income does not impact the husband's income for calculation purposes and vice versa. Hopefully that answers that question. If not, go ahead and send us an email to business@mysolo401k.net and we can look at it a little more closely. You may want to give us some more information on that. Okay. It looks like you have a follow-up question here. Does the 0.9% additional Medicare tax amount on earnings greater than $250,000 apply to solo 401k plans? Well, number one, it would apply on the personal side, not on your taxes. It doesn't apply to solo 401k plans per se. But you're asking, the IRS does not seem to include that. So there's the additional 0.9% additional Medicare. So I would check with your CPA on that if it's going to impact your business and personal side, but it's not going to impact the solo 401k because contributions to the solo 401k plan are based on W-2 wages for the S-corp, and then line 31 of the Schedule C for a sole proprietorship. Now, another item to consider here is that when you are a sole proprietorship, the starting figure for the calculation, the contribution calculation, is going to be line 31 of the Schedule C. And then you have to subtract 1/2 of self-employment income tax from that 100,000 before you can calculate the employee and employer contributions. On the flip side, it's more advantageous if it's an S corporation, because with an S corporation, you don't have to subtract that 1/2 of self-employment income tax or even payroll tax when you're doing the calculation, because it's going to be based on the gross W-2 wages. Therefore, it's going to take less W-2 wages to get to the overall annual contribution limit for the solo 401k. What is more, when you make employer profit sharing contributions for an S corporation, if you make an employer profit sharing contribution, that's going to be a deduction, as I mentioned earlier, on the business side. However, it's also going to be advantageous on the tax side of things as well, because, let me pull up some information on that here. Give me a moment here, because they're not going to be subject to the FICA tax or Medicare tax. So profit sharing contributions, in short, for an S corporation are exempt from FICA tax, because it's the corporation, not you, that makes that employer profit sharing contribution to your plan on your behalf. Let me see if I can locate that link that I can share with you. Here we go, from the IRS website, so you can learn more about that. Take a look at that there. Okay, well, thank you again for joining today's daily webinar, where we discussed how to maximize self-directed 401k tax savings by making both pre-tax employee and pre-tax employer profit sharing contributions to the self-directed 401k. You're welcome. Again, we'll be back here at 1 p.m. Pacific time. Until then, have a great morning.